What's up, Louis? It's Guys here. I hope you're doing great. Today I'm here with Marlies again, and if you haven't already watched the first part of the series where we talked about some beginner tips about acquiring finance from your bank, definitely make sure to check out that video. Marlies, thanks again for being here.
It's my pleasure. Thanks, Louis. I'm so excited. Thanks.
So let's jump straight into it, Marlies. I want to know, how soon after buying my first property can I acquire a second property?
Immediately, if you want to. So it's basically affordability. You don't have to wait for one property to register. So There is some few tips and tricks we can discuss, but I think we need to discuss it off the record. But in the old days, what you would have done is you would buy 4 properties and submit one at each bank.
Sure.
But always I say you can do it, but risk is also there. So just make sure that if something happened, that you're not the one that's going to feel it. So there's definitely ways to grow your property portfolio quicker, but there is risk involved.
Yeah. Obviously, the banks assess the risk and they look at your portfolio and your situation, but it's definitely possible. I know I purchased 2 at once, so I wanted to ask, can I use rental income from some of my other investment properties to improve the chances of getting a loan for a new property?
Definitely. It just needs, it has to be going in your banks for the last 6 months.
Okay.
That's your existing rental. With ABSA, you get the buy to rent, which when you buy your second or third property, and you know you're going to get rental income, we can use that as well, but only 80%. So you just need to let us know that you're buying for investment so that we get in more or less what's in the area going rate of rental income, but definitely.
So that can actually improve your chances to get a new loan.
By small portions, it's not going to make you approve now from $1 million to 3 million, but at least it will add
every bit helps, of course.
Yeah, the bank will see that there will be rental income. So definitely.
And then on that question again, there's obviously a combination or a difference between a property that creates cash flow at the end of the month, that gives you a positive amount, compared to something that maybe has a shortfall on it. Can you acquire better financing if you have a property with cash flow that will put positive in fact, it will actually increase your income compared to something that might take a bit of your income away? Or how do you guys assess something like that?
So that's more your student accommodation,
multi-let student accommodation, or let's say a paid off property a single let paid off property that creates cash flow.
But look, you've always got that tenant that might disappear into the thin air. So
absolutely.
Firstly, if your affordability must be in place. If you've got a good track record where your rental income is showing nicely, there's no tenants defaulting. There's obviously that they can look at it, but mostly I would always say just look at your affordability firstly.
Absolutely.
And then we can add your rental income as a add-on.
So it's not gonna, like you mentioned, from being able to afford R1 million push you up to 3 million rand, but it's definitely gonna help in
helping, and that's why I say it's 80% basically. So it's not it's a lot, but it's not.
Okay. Something else I wanted to ask is, and this is of course a very common question, is should I buy a property in my personal name, a company, or a trust, and why? And why do people talk about this topic so often?
Well, good question. It is what you want to do. Do you want to buy your own property where you're going to stay? Mainly, I think that is the one that they'll say do it in your personal name. But if you want to buy more than one property portfolio, growing, leaving a legacy for your kids, or if you, like me, don't get any pension, then the property structure is definitely the way to go. So that will be your structure, will be the PTY, and the trust will be the shareholding. But definitely to grow it aggressively, companies is your better safer with your tax benefits as well.
There's a few benefits to having different structures in place. I think I always tell people the only advantage, in my opinion, to buying property in your own name is it's easier. It's so much easier. There's less documentation and so on. But if you really want to grow your portfolio, it just makes so much sense to use different entities. And based on that, another question I get so often is, what if I register a company today? I have no financials in the company. I haven't traded. I haven't. It's not a profitable company. It's a new company. Can I get financing with this company?
Definitely. So we will basically use the client's income. If it's a salary income, self-employed income, it's going to be your property PTY. So it won't be a trading PTY. It won't make profit from the first year on. Normally we advise that it doesn't, because it's your property, you want to get that tax benefit. But if it's your first ever property in a company, we use the client's affordability, pay slips, or self-employed.
Okay. No, I think that's good to know.
I get a lot of questions like
it's absolutely possible.
Yeah, absolutely.
I know a lot of people say that avoid buying through the company because you need 2 years trading financials, and it seems impossible, but it is possible.
It's definitely possible.
Something else I wanted to ask is, does the bank look at your area and the type of property you buy when they approve your loan?
Definitely. So not all the banks. So there's some banks that would say it's an A or B or C area where they might approve you for 100%, and then when they go out and do the valuation, they come back with a 70% because they didn't know the area beforehand. So definitely some banks are more reluctant about what areas, where the other banks are quite comfortable whichever area you buy, as long as the property structural is in a good area and there's no built structures, things where they need building plans. So definitely.
Something that popped up now. Is it possible to get 100% loan for vacant land?
No. So right through, it's a 60% for all. I think Standard Bank's the only one that can give 80%.
Okay.
But let's leave it at 60%.
Okay, that's interesting.
When you want to build, you can get 100% on building.
Yeah.
Then you have to add the stand and the building package. That's a different story.
How do you approach a loan like that? If you bought the land, you're happy with the 60% financing and you want to build, how does that work?
Normal building plans, quotes from your approved NHBRC builder.
Okay.
So you need to show the bank that you're building for 8,000 or 9,000 rand a square.
Yeah.
So they just need to make sure the builder is not your fly by night.
Yeah.
That whatever you built is in line with what is going on the property. So it's a normal, straightforward building loan.
And do they give good interest rates on those loans?
Normally, because there's a risk, they want you to actually complete the building. So the interest rate would be higher. I think Standard Bank has got a 1.5, which they add. But once it's built, you've got your NHBRC and you've got your occupation certificate, then they'll drop the 1.5. Just to make sure that you don't build for 5 years.
Yeah. They're just assessing their risk at the end of the day. Is it possible to buy more properties using equities from paid off properties, or, for example, refinancing with a property that has equity available if you maybe purchase it for more than it's actually worth? How often do you help people with refinancing? Definitely.
Refinancing is it's still a very new concept where people never knew. In the old days, your father, mother, but you pay off your property and that's the main. But nowadays, people has got a lot of assets, so they'll use their current assets, property, and they'll refinance it. It's the same process, affordability, property value. But I think the bank is more happy to lend on a existing asset than refinancing a new property, even though it's the same process.
Yeah, of course, they can actually see that. Let's say you have a property for 2 years, you've been paying your bond, you haven't missed payments, and you want to
pay. That's what they want.
Again, the risk is automatically less to give you an additional amount to borrow.
They've lent you 2 million and they'll lend you again, so it's fine, you've paid it.
What is the difference between a refinance and a further loan?
So basically it's the same thing. So refinancing, or it's a second bond. So you're taking your existing property and you refinance the equity if there's any equity. Yeah, so it's basically the same.
So based on, building a portfolio, how does being indebted or having clothing accounts or store accounts affect my chances to get more loans?
It's when you're not paid, that's the problem. With technologies and everything now, you can't say you don't have time to go and pay your clothing account of 50 Rand. You can do an EFT, you can transfer. So it's the clothing accounts and the credit cards and everything. You have to have it. That's the way you show the bank that if you're given a credit card or a clothing account, that you don't maximize it, that you know how to spend it. You buy something and pay it off. So I won't say it's something that you definitely need, but the question I get is how many. So you don't have to have 4 or 5 clothing accounts or 4 or 5 credit cards. You just need 1 or 2 that you actually pay. And that will give the bank an idea that you're responsible. You know how to deal with money. You don't just spend everything and then, don't pay it back.
It's like a double-edged sword. It can benefit you a lot, but it can also be quite negative.
Yeah.
And then let's say I get to a point where my affordability runs out. Can I combine my income with my partner to build my property portfolio?
Look, yes. So the more affordability, the higher your affordability would be, but they still figure both. So they'll look at your expenses and they look at your partner's expenses. So if your combined income is 200,000, but your joint expenses is 100, then definitely there's a surplus to buy more property. So it's not like you just rely on the other person. It's everything thrown into one basket, everything that's been deducted, and then from there on we'll say jointly you can qualify for 2 or 3 million property, or in the company or in your personal capacity.
Would you say this is smart to start from the beginning to buy as a couple, for example? Or do you think it makes more sense as an individual to buy first and later on move to a combined income?
Depends on what you want to buy. So if you want to buy the 3 million and you can't afford it without your partner, then bring in
Makes
your
sense.
partner. Same with our first time buyers, which I really love when they start buying together as a group where 3 or 4 young guys are buying property together in a company structure, and that helps them to grow a bigger portfolio where they might have only bought their own little one for 700. Now they can actually go into that 1.5 investment properties. So you don't have to be married to do it. It's going to be a group of friends having the idea of growing property portfolios for themselves. So
you just need the right structuring for something
all
like that.
About if you're planning on doing it, just make sure that everybody in the structure, even if it's in your personal name or they need to do a pre-approval, because you can't have 1 good and then 3 bad credit score. So everybody has to have a more or less above score,
a decent score. Decent score. Thank you so much, Marlies. I think for everyone watching this video, you need to go to their website at www.myhomeloans.co.za and do a pre-approval. See where you are standing at the moment so that you can take it from there. I know when I started, I did a pre-approval and I was approved for 800,000 Rand initially, and I thought this is where I'll be capped. And luckily, with the help of Marlies, I was able to acquire many more properties. So make sure you check that out.